Good afternoon, everybody. Just give me one quick second. Disclosure should be up. All right. Fix something here real quick. All right. Hopefully I'm running properly everywhere. Working off my laptop today from my apartment. Haven't streamed an afternoon meeting from here for a while. So hopefully everything sounds right. I feel like every time I don't use a computer for something for a while and I go to do an afternoon meeting, YouTube is somehow messed up. But hopefully it's good. All right, let me do this disclosure. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. I believe the position disclosure is the exact same as it was yesterday. Boom. Cool. Thanks, Oriel. All right, let's jump in. Oh my God, the market went down. I was starting to think that that wasn't even possible anymore. We actually had a red day today. Let's have a look. SPYs closed down 0.75%. Qs closed down 1.5%. Ooh, ouch. And the IWM closed down 0.8%. So SPY's down 0.75%. It felt like a big down day, but it's only 0.75%. So not really enough of a move to pull back too hard. And it's also only one day on all the vol control universe buying that is set to come in over the course of the next 2 weeks. But it's better than closing flat, I guess. So, I mean, look, the market has been long due for this correction. We've been looking for it. It's been very, very, very difficult to get for reasons that we described. Even this morning, you know, we gapped up. We were still $8 to $9 extended in the SPYs, $10+ extended in the Qs. We've just been sitting up in this extreme extension zone to the upside for 5 days. If you want to include this morning, 6 days in a row, which is insane. And that's on top of this move that we had. We've spent a lot of time this week going over all the details and data on what was just creating this crazy underlying bid to the market, where it just seemed like we couldn't actually break lower. And today we finally did. You know, we started to see some data that maybe the CTAs are running out of firepower a little bit on their buying. At least they're beginning to. But again, it's right potentially as the volatility funds are set to step back in. And I saw in a different note today that the vol funds actually bought a really large amount of stock yesterday. I already forget what the exact number is. I could probably find it if you give me a second. But it was like one of the bigger buy days that they ever have. Target Vol Control bought 11.8 billion of equities yesterday. It's a really big number. 11.8 billion of equities yesterday. Because I remember looking, Bill posted this morning at like 8:50, right as we were doing the morning meeting, the numbers that the vol funds are expected to buy over the course of the next 2 weeks based on, you know, the realized volatility. And I think I remember the 2-week number, if the realized volatility average stays between 0.5% down and 0.5% up, seeing this morning was 43 billion. And I remember thinking to myself, like, I actually thought that that number would be much bigger. I actually thought that was supposed to be like 53, 54 billion. Well, then later in the day, I read that they bought 11.8 yesterday. Well, there's your 11 billion of buying drop off over the course of the next 2 weeks. They bought 11 billion of it yesterday. So it seems to me that we might have gotten a moderate pause in systematic buying today, which actually enabled us to be able to get a little bit of follow through to correct some of the extreme upside extension that we have had. And we still, with the S&P, didn't even get all the way back down to the 80 MA on the daily chart. So right now we're trading at 556.50. The low of the day today is about 555, and the 80 MA still down to 553. So even at the low of the day today, we're still $2 away from the 80 MA. But there's no real extension anymore, based on the way that I view extension. I guess you could argue that the spread between the 8 and 21 EMA was widening, so there is a little more extension down to this 21 EMA, that lower band of equilibrium, than there had been, say a week ago as those moving averages were crossing. So there is room, for a healthy pullback in the S&P to continue to anywhere between 547 and 553 at this point. But we'll see if that actually happens. And we've got Jerome Powell tomorrow, who will probably dictate how this market moves. So decent little pullback from the SPYs, pretty decent pullback from the Qs. Qs down 1.5% today, so that's selling accelerated. Qs basically got all the way down to the 80 MA on the daily chart, which I explained it in yesterday's afternoon meeting or the day before that. I've got like two QQQ short trades kind of going on simultaneously. One is more aggressive, just looking for the move down to the 80 MA. One is a little bit broader than that. So pretty much into the close today, as we were getting to lows, I was able to fully liquidate the more aggressive QQQ trade that I had on. I do still have the other one, and I've got it actually in size. But I won't be implementing that more aggressive game plan again unless we get $10 extended plus to the upside again. Which right now we're not extended at all in the Qs anymore. And the other stock I have is more for a bigger picture kind of market-wide pullback if it were to happen. But I got to be a little bit careful on that. I'm probably still a little bit too heavy in it, to be totally honest. So was able to make a decent amount of P&L back today as we finally got the correction following the game plans that I've laid out for myself. You could say that it was unfortunate that over the course of the last 2 days, the time correction for the market forced me to buy back at a loss maybe 15% or so of the QQQ short that I had on. But I don't regret it. I don't regret it at all. You have to follow your game plan. I really think it's the key to consistency and the key to success, and just the way that game plan is formulated. The flip side is I could say I'm lucky that I only allowed myself to get pushed out of 15% of the position. It could have been more than that. So I still had a pretty big position today to be able to capture this downside move and make a lot of the negative P&L back. So I'm happy about that. I'm still not green in the Qs from this move higher from when I started shorting. I was able to make a decent chunk back, but I'm definitely not green in the position. So that just is what it is. We'll see what happens. So today's technically like a day one down. It is a bearish engulfing candle. I would normally describe today as like a day to take notice of, because usually when you get a big engulfing negative Mariposa that closes on lows, you get a day two after that. You get some downside continuation. So we could still see these Qs just technically work towards the 21 EMA, which is still all the way down to 468. It's another $7 or $5 down. I think would make total sense after seeing a day one negative Mariposa today. However, what happens tomorrow with Jerome Powell will probably actually dictate the price action more than anything else. So always pay attention to your technicals, and I do find that news tends to move in the direction of the technical setup. But I also always like to say that if anything can very quickly throw all the technicals out of whack, it's some sort of new news event. So we'll see what happens with Jerome Powell. I do still think that there's some risk to the downside here on this event. I've been saying that from the beginning. The market's still pricing in, and I haven't seen a very recent update, but the market's still pricing in closer to 4 cuts for this year, and still pricing in a percentage of a 50 basis point cut for September. And while I do think, I mean, we've seen this from other Fed speakers that have been coming out. I think Powell's going to echo it to some degree. Well, I do think that Powell will have a little bit more of a dovish take on, all right, you know, unless there's a blow up on the economic data, we're finally going to get started and finally going to begin cutting. But I also think that he's not in any way going to indicate that there's going to be a 50 basis point cut. It depends on how strong his language is on it. You know, he could be flaky and just say, yeah, you know, we're gonna probably start cutting, but we'll see what the data looks like, and that leaves potentially open to interpretation for market participants a 50 basis point cut. But I think that the risk is more towards him saying, you know, we're gonna do things slowly, and we'll start with a 25 basis point cut, and then the market has to unprice that out, which could create further downside price action. So I actually do still think that the risk is the downside of this event tomorrow, but there's no way to know until it happens. So we will see what he says. So that's kind of where the market's at. We basically fully corrected this upside extension that we had on the daily chart. There is definitely room for us to continue lower, in my opinion. The IWM is also not really extended either at this point. So yeah, we'll see what happens tomorrow with the event. As far as individual stocks go, you know, there were some pretty bullish looking charts out there this morning, and I think we did a good job of saying, you know, if you want to try to buy like the break higher in Apple, I get it. It's a great looking bullish consolidation, but just remember where the market is. You're still fighting the market. So I think there are a lot of people, rightly so, interested in, you know, looking at Apple continuation off of the bull consolidation, looking at Meta for a breakout through 540, looking at some of these semiconductor chart patterns for continuation, Nvidia above 130, AMD inside and up, SMCI with this tight consolidation that it has, Micron with this tight consolidation that it has for a move above 110. And actually a lot of those names were the strongest stocks in the beginning of the day and were trying to break out and were trying to get follow through. Look at this opening Apple move. Look at this opening Meta move on a day two kind of continuation. Micron in the first 5 minutes really spiked up. But I did my best to try to warn that I think that you can't become complacent on this market extension. I know it feels like, oh my gosh, after 5 days in a row of us not being able to break down, I'm just going to throw in the towel on that and try to buy some of these bullish looking daily charts. But I still got to go back to the rules. I always got to go back to the rules. The rules say that you really shouldn't be buying equities when your market's as extended as this is for anything more than a scalpy type of day trade, or completely separate if you're trading something that has an earnings report. I did like Zoom this morning for continuation. We've consistently seen Zoom gap up on pretty good looking earnings reports and then sell all the way back down. I had a hunch that this one was actually going to be different. That was right. But this is going to trade in its own universe. It doesn't matter that the market's extended when a growth stock like this is reporting earnings. It's going to be in its own universe. But for anything else, just very difficult to buy these charts. And we were really watching this Nvidia 130 very closely this morning to see if it could lose that and break lower as a signal that maybe we can actually begin to lose the Qs. And we also had a really good call out short for the SPYs. I haven't called the SPY short in a while. It's usually either the Russell or the Qs. Off of the high, basically this high candle, this little tail at 945 as it was coming down. The IWM was forming a big tail at the same time. That very early we said you could short versus that high. That was a really good trade. I actually didn't call it out for the Qs in the same way because I thought that the Q trade was trickier because this one was still below the opening high, whereas the SPYs and the IWM got above it and then kind of came back down. And then we called out a secondary short trade off of for a potential lower high off the 1025 candle. I was like, if you're really aggressive, you could try to short this as a lower high. I didn't want to see the market retrace more than 50% of this breakdown candle. And if you guys remember, every time we've had what's looked like a potential breakdown candle in the last several days, it leads to nothing and you pop right back up. This time, we had the lower high, we had the downside continuation. We actually finally had a bigger picture pull lower in the market, which was great. Another short call out, not as much from me. I think it was more from Dennis and A bunch of us also then jumped on the bandwagon with him on an additional short here into this pivot high at around 1240. So, just several really, really good index level short call outs today, and I think a pretty good job recognizing that, hey, some of these daily charts are looking pretty darn bullish after they've consolidated. They're not too extended, but the market still says probably don't buy them, or if you do, take it with really small risk. So overall, I think it was a really good day. We certainly had to be more patient to get this pullback to correct this upside extension than I almost ever remember from the index level. I don't really ever remember us just hovering day in, day out at $10+ of extension. And by the way, that's the dangerous / difficult part about shorting a market that's extended, because a market that's extended can always become more extended. Or in this case, pretty unique from anything I ever remember seeing, we kept like grinding up just enough to where every morning would be a little bit, the ADMA would move up, but the market would also move up, and I would still be sitting on that same $10 worth of extension, but at a higher price. So, if you started shorting around SPY 550, if you started shorting more aggressively on the 15th, which is really when I start, really in the afternoon part of the 15th, not in the beginning of the day, luckily, is when I started shorting more aggressively. Even if I waited till 550, 250, by the time I actually got the pullback, the ADMA is above that price. So it was just a very, very difficult trade. You had to be patient to finally be able to capture this move. And then even finally capturing this move, if you started early, which I certainly did, it's still very difficult even at this point to be profitable. It's just, I still think it's the right trade, because like I keep emphasizing, this degree of strength and the fact that we were able to just sit up here at $10 of extension for 5 days in a row and grind higher, I don't know if I've ever really seen that before like that. I've seen it where you're getting like momentum up to extend higher, but not just this like, all right, we're up a few bucks and the ADMA's moved up and now we're up a few more bucks, but we're just ranging out all day and kind of correcting through time, and the next thing you know, you're a little bit higher. I've almost never seen that before, and it just made for a very, very tricky trade. So we'll see. Definitely a good day today, I think, for the people who maybe got a little uncomfortably big on the short side to unwind a lot of that position. I know I was able to unwind a lot, and I am still short. I am still even actually net short, I think. Try to take a look at my numbers real quick. It's partially because I've unwound a lot of longs to try to prepare to go away. 369. 15. Yeah, I am still net short, but not by a lot anymore. It's getting closer to equal after today's move. It looks like I'm like 1.5 short for one long at this point. So it's come down a bit from where I was this morning, that's for sure. Trying to think if I have anything else to talk about. I think that covers it. Today was the day that we were looking for. We got this pullback. I do think that there is room for more downside after today's candle. I really do. But we'll see what Jerome Powell says. And if you really start pulling back closer to this 21 EMA, then it's hard to expect too much more than that. But we'll see how it plays out, especially because we do still have a lot of underlying bullishness, underlying bid to this market. I think that's all that I've got. I am happy to answer any questions that anybody has. Thanks, Rich. I'm not seeing anything in the VTF for now, so I'll pop over to the YouTube. Yep, Cyril's saying we finally got the Qs almost back to the ADMA on the daily. Yes, we did. From Kevin, I was thinking about you today during the drop, like he gets to save himself. I did get to save myself by a good bit, sticking with the game plan. Would be great to get some selling overnight in the futures and fully catch up with the 8 EMA. I would love like a quick additional gap down tomorrow in front of the Fed to just de-risk a little bit further, but we'll see. Awesome stuff, Corey. Glad you caught it. Thoughts on Zoom? I really liked the Zoom report. With that said, like we said, this is not the first time Zoom has reported a good-looking report and then sold off. So there were some current concerns that it could do it again. It seems like it does it every time. Kind of thought that this would be different. I think that the growth complex is changing again. You know, obviously the market's not destroyed, but growth is still overall destroyed. A lot of these stocks are coming off like absolute lows, and it's interesting to see. You know, I'm not the guy who is going to poo-poo on anyone who is a money manager at all, but it's interesting to see that Kathy, which I didn't know this, I don't really follow what she does, finally fully got out of Zoom, and then you get this move. And I heard that she was reducing her position in Unity recently. I don't know if that's true or not. I haven't fact-checked it, but it's interesting to see that she did that. Now this thing is another one that destroyed, but is given a $3.50 bounce back on a $14-15 stock. It's a pretty healthy upside bounce in this type of name. So I actually do think that there is some degree of rotation happening here a little bit, and I've seen it in the data also that the hedge funds have been selling more of the semiconductor and Mag 7 names a little bit and rotating into more smaller cap names right now, which I think is interesting and maybe can help to maintain a little bit of a bid and some further mean reversion in some of this growth stuff that's just been absolutely and utterly destroyed. So yeah, I mean, that's the extent of my thoughts on Zoom. Next question, do you think that the extension trade can be different in this case because we had extreme extension down and then just snap back, so it's easier to stay above the ADMA? But usually when you go from extreme extension down to then all the way up like this, it makes it even easier to have a deeper pullback. And that's been the interesting part. Probably also the reason why I started on my short too early was because of where we were coming from. You know, I didn't just wait in the same way I normally do for larger degrees of extension to short. I was like, wow, look at where we're coming from. I referenced it, I think, in the morning meeting quickly this morning. Just a couple of recent, pullbacks that the market has had. You could reference this almost 5% pullback in April, this little pullback that we had in January, or even the bigger pullback that we had, last year. You don't typically just go vertically straight up like this. You usually, even throughout that process, it's a process. You bounce decently, you pull back, you get a higher low, and then you get continuation. That's what we saw here in April and May. In January was the same thing. It was a smaller pullback, we had a pullback, we had a slightly new high, we had another pullback, but it was a higher high, and then we broke out and got continuation. Even the November period last year, which was one of the more fast bull moves I've ever seen, it gave a big, 3-4 day move, got extended, and then look what it did. It went sideways, not like grind up sideways, accelerating up sideways like we kind of had these last 5 days. It went sideways for 1, 2, 3, 4, 5, basically 6 days. You could even argue potentially 7 days to correct through time, which we know is more bullish than a correction through price, to correct through time that really big, 4-day move that created a huge amount of upside extension. What was that upside extension? And that huge upside extension, by the way, granted it was a $430 ETF at the time, now it's a $550 ETF, but that, huge extension from back then was $11 to the upside, and off of $11 of extension, we decided to spend 6 days time correcting before we actually broke up. And for me, that was all that I needed to be able to make money and liquidate the short that I had for a profit. And then when we caught this next leg up, I began to reshort again up here at 452 probably when we got super extended. This environment is different. It's been different. I've almost never seen anything like it. This big of a move from extreme downside extension to extreme upside extension with no time correction really. a little bit, I guess, while it grinded higher. Definitely no price correction at all until today, and then finally on day 6 of extreme upside extension, you get the pullback. But this is why we always need to humble ourselves by reminding ourselves that in the market, if you're doing this long enough, anything that can happen will happen. And risk management is the key to success in the business. And that's why it was driving me crazy the last couple of days, even though, again, it was only a smaller part of my position. 10%, I covered 10% of my Qs yesterday for a loss, 5% of my Qs like the day before that for a loss. It was driving me crazy to buy back stock at extreme extensions, the opposite of what I want to do. But again, the time correction portion of it dictated that I had to, per my rules, just for risk management. Because what happens if we had another day today where we just held up, and then maybe Powell says something that the market likes tomorrow, and we just time corrected for 3 days into it. So now maybe my market is $7 extended, and I've got full max short leverage on, and Powell says something good, and the market rips to 580. I'm like, I'm not going out of business for this short, I'll tell you that. So risk management is the key to success in the business, and following your game plan is key to risk management, because you have risk management built into your game plans. So we'll see, Cyril. I might get close. I'm trying to get close. From Uvixi Bull, ever thought about streaming during the day instead of after the close? I do in the VTF. I'm not going to YouTube. I'm happy to do the afternoon meetings in YouTube to provide education and things like that for anybody who is interested in learning more about markets. But if you want access to what we're doing in the morning meetings or during the day, you have to be a member of T3 in some form or another that gets you access to the virtual trading floor. Also, what do you think about the 1145 long that the NASDAQ gave on the 15-minute today? What do I think about the 11? This is what I thought you were talking about down here. So that was a cue for me to cover some of my short more than anything else. But in other circumstances, this has been the long trade that I've been looking for from a day trading perspective. I just don't want to do that because I was still short, looking for a little bit of a bigger move. So for me, I just covered more of my short and then re-shorted it into the up move. But this is exactly that type of like 5-minute RDR setup that I've been doing into these downside moves with a pretty good amount of success. I just didn't take it today, where you just got smoked in this market for however many red bars in a row this is. The volume is accelerating, the size of the bars are accelerating, and then you get this like, you might have tried it initially on the 1145 candle, actually got pushed out on the 1150 candle, maybe. But this is then when you do that like 5-minute RDR to satisfy the 5-minute extension. So I like that trade. If I took the long, I would have been all out by the 80 MA on the 5. I would not have caught this bigger move. But again, I didn't take the trade at all, but I do like it. That's more, I've been doing a lot of that from a day trading perspective recently. I just didn't do it today. Yeah, and you weren't quite fully corrected enough on the daily chart yet either, which just certainly made me a little bit hesitant on, jumping in too early on the daily chart. The closer you get to the 80 MA on the daily, the better this long setup actually is. Yeah, good confirming volume on this volume pickup as well. All right, popping back over to the VTF. From Dennis, what's your thought on Snow with earnings and buyback announcement? Thinking maybe it sold off with the market more than for any other reason, or was earnings and the outlook not good? So the earnings report I did not think was good. I didn't think it was terrible, but I didn't think it was good. The guidance was not great, if I remember correctly, and guidance is the most important thing. I did think, and I mentioned it in the morning meeting, that when you couple that with the buyback increase, that maybe we could look at this thing for a long around 120. That idea obviously failed. They tried to hold 120 on the first test. 120 was that absolute low. It gave a quick bounce, for $1.30, and then broke that low and failed. Then for me, I know Tate, I think, tried it 1 or 2 more times off of some of these pivots. But for me, I did type it up when it was below 120. And I said, all right, my idea is not manifesting itself. It's below 120. I'm done with it. I'm out of the way. So I thought that there was potential for them to try to hold this thing in a little bit better today. And they just didn't. And again, the outlook was no good. But sometimes we see when their earnings reports aren't great, but they couple it with a buyback, that the market likes the buyback enough to overlook a miss on certain aspects of a report, especially if a stock is beaten up like this one is coming into it, where they can buy it back a little bit, but that certainly did not happen here. So at this point, it closed on lows and, very near an all-time low. I think you just got to be patient on it and wait for a new setup to come in. How do you define growth when you say the growth complex? Some of these growth names have not had great quarters for some time. Maybe I'm missing something. Sure, I can tell you what I mean by it. And yeah, maybe some people have different versions of what growth means. So for me, I classify growth stocks broadly into I don't want to say non-profitable, but usually they are non-profitable. They're just in the growth phase of their business, where oftentimes that means they're not profitable or not yet profitable. They're long duration stocks, which means that they're heavily influenced by interest rates, because they're in a period of time where they're not profitable. They're working towards getting to a certain point of scale or whatever it is, to get to that point. So it's primarily tech and biotech is the area that I consider to be growth. So non-profitable tech, non-profitable biotech, they are going to move very much based on interest rates. So those stocks have been absolutely and utterly destroyed as interest rates have moved higher, because they don't make money. And when you're in a high interest rate environment, you got to make money. And if you're not making money and you're trying to borrow to build out your business for the future, your cost to do that is very high when you've got interest rates at highs. So when I think of growth, that's what I think of. I've never found like a perfect, like, singular ETF that I like to look at to get an idea of growth. I will type up ARK, but I don't think ARK is perfect by any means. But, she is pretty much entirely invested in growth tech and growth biotech. But I don't think it's like necessarily a good basket to give you a hint of how growth is performing. Yes. But, insofar as just trying to get a gauge on how growth is doing today, I will type up ARK real quick just to see how ARK is doing, because that's part of it, but it's definitely not enough. So I'll type up ARK. I'll take a look at XBI, but XBI is not great either because it's not weighted well. It's and I don't know a ton of what's in XBI, but my understanding is that they changed the component or the weighting of the components in XBI at some point somewhat recently to make the bigger companies and more profitable companies actually a bigger part of it, and like what you think of as smaller growth biotech now has a lesser part of this XBI. I'll still type up XBI, I'll type up ARK, and I'll just type up some of the names that I know. I'll type up a Zoom, or I'll type up a Unity, or pretty much any one of those COVID darlings that the investment banks robbed the average person of their money by bringing them to market at obscene valuations in a time where they were able to get away with it. Pretty much any of those are the names that I'm talking about. Now there have been some that have performed that are not coming off all-time lows, basically, like Unity and Snow and Zoom, or Teladoc. That's another one. There are some that have been able to be a little bit better. Carvana is an example of one that's been able to be a little bit better. This is still considered to be a growth tech stock. Granted, it's a little bit off its $380 high at this point, but it is also nicely off of its low. The stock has had a pretty good turnaround. Palantir was the next one I was going to reference. Palantir is another example of a growth tech name that has fared much better. DraftKings is another one that, I know it's pulled back a little bit recently, but overall, this is really improved from this $10 low to get back up to even trading at 35 where it is now. So there are some that are out there that have been able to perform and do okay recently, but still, even at this point, with interest rates still, at highs because the Fed hasn't cut, most of those names are just absolutely trounced upon. But yeah, that answers your question. All right, nothing else in the VTF. Let me check the YouTube one more time. From Corey, IWM target over the next 60 days. Very hard. Very, very hard right now. I am really interested, big picture, to see how the IWM performs relative to the Qs over the course of the next 60 days as we get our first cut. Really interested, actually. I'm inclined to think, like, part of me wants to say, well, it's priced in. Everyone knows that the cut's going to happen. And if anything, the concern that I keep bringing about is that the market's pricing in more cuts that are actually to happen, which that in turn you could use that as actually a bearish thesis for the IWM. I'm actually more inclined to think, though, that we are, big picture, going to see some degree of a continuation of rotation out of semiconductors and out of Mag 7 and potentially into some of these other names. Again, I've seen the data here that over the course of the month of August, overall hedge funds have been reducing exposure in Mag 7 and semis and buying more small caps and probably some mid caps. So I could, it's a very tricky question to answer because I can easily see two sides of an argument and I could see either side of it working, which is that they're overpricing in the cuts. When that comes back down to reality, it sends the IWM lower because this, again, tends to be more interest rate sensitive. But I can also see that as the cuts actually occur, it just gets taken on face value and you get some further rotation that comes out of Mag 7. And the other thing that just constantly has me worried about, like, I really think that we have the opportunity right now to see more rotation come out of Mag 7. But that doesn't necessarily mean that it's a thesis short, because the companies themselves are just going to be buying back the stock from the sellers. So it's just so hard to see a real sustained down move in Apple when it's got a $120 billion buyback or whatever the hell that crazy number was. So very, very hard question to answer right now. I guess to further expound upon that, usually big picture, I have a strong bullish or bearish like thought process and thesis. And big picture, my thought process has been pretty much bullish since October of last year. It was definitely more bearish starting in January of last year for the period of time. We called that correction very, very well. But I've been pretty bullish for the most part. It's just been a matter of what does that bullishness look like. And to my disappointment, it was just a lot of it was just three companies that actually brought the S&P and the NASDAQ higher, and there wasn't as much participation in this year's up move as I would like. I right now am very, very neutral on this market from now through the election. I'm not overtly bearish. I'm not a huge bull as I've been in the past. I'm paying attention to the flows as they come in. The flows are what caused this entire move higher. But I'm inclined to think that this market struggles to continue when those flows get a little bit drier, which should be starting in the beginning of September. And then the first 2 weeks of September is pretty seasonally bearish. I was talking to my wife about me potentially not trading as much on this vacation. And Last year I went away in October, but usually I go away in like the beginning of September, like I am this year. And it always seems like whenever I leave, the market is going crazy, and it's like, I need to log in, I need to trade, the market's moving, blah 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 blah. I don't care that I'm away. And then I realize it's like, well, wait a minute, I'm always going away in the I'm always going away in the first 2 weeks of September, and that just tends to be a very seasonally bearish time, and that's why things then get, so absolutely hectic. So I don't know. We'll see. We'll see. I'm very big picture neutral right now overall, I guess is the bottom line answer to your question, Corey. And I appreciate you asking it. I'm glad you're able to join us today. Look, we can see consolidation in the queues, and then small caps carry higher. That's kind of what I think also, but we'll see. Nice. Yep. Yeah, I could use a break a little bit also. From Austin in the VTF, when you look at earnings, what metrics do you mostly look at that gives you your opinions on whether or not it looks good? Very simply, beating or missing on EPS, revenue, and EPS and revenue guidance first and foremost. I tend to weight that importance towards the guidance compared to what it's done previously. So it's the first thing that I look at, and then I look for any buyback information, and then I look for any important language that might be coming out of the CEO. Those are the things I pay attention to. But first or foremost, when I'm just kind of scanning through the earnings reports in the morning, I'm just looking at what company it is, what those numbers look like, and the chart. And if I don't see anything that's immediately of interest to me in a combination of what the numbers look like with the chart, I immediately move on. If I see something that looks interesting, then I dive in a little bit deeper, and I'll read more of the commentary and things like that to try to draw a stronger opinion on it. But guidance first and foremost, and then buybacks. I almost actually feel like buybacks at this point, if they announce a buyback or increase on their buyback, it can sometimes be even more important than their actual EPS and revenue numbers that are backwards looking. So guidance probably first and foremost, and then the numbers that they reported, and then also the buybacks and sometimes commentary. Thanks for the question, Austin. All right, folks. Looks like I got through everything. It's approaching 5 o'clock. I'll wrap it up. Have a great night. I'll see you all tomorrow.